Yo, hello everyone and welcome back to the Dividend Investor. I'm back today with another video. In the topic of today's video, I'll be going over the Sbux stock, analysing their dividend and a bit about the company, seeing whether it'd be a good fit for you and your dividend portfolios. Before I get into the context of the video, guys, if you could please smash the subscribe button on the channel, and we're hoping to reach 1,000 subscribers. Also give a like on the video, comment, boost that YouTube algorithm and get my channel and this video out to more investors out there. So yeah, guys, so that's it with the introduction. So yeah, into the video now. Sbux is a massive company, 69.2 billion market cap. So look about a bit of the information of the company. Sbux Corporation with a ticker symbol SBUX on the Nasdaq GS exchange, founded in 1971. So still a relatively new company in comparison to some massive dividend-paying companies like Coca-Cola and Johnson & Johnson, who have been around for much longer, but still. Over 40 years now, nearly 50 years of Sbux. Industry restaurants with the consumer services sector. As I said, the market cap is 69.25 billion with outstanding shares of 1.17 billion. And there's a link to the website if you want to check it out. They have over 400,000 employees. 346,000 employees. And you see the growth over the last 6 years. They are steadily growing all the time. They have many different locations over the world. So let's look a bit into the management. This you can see you can't see the salary of this manager, but the manager has had 2.9 years as the CEO, Kevin Johnson, 58-year-old. And there's a little bit about the chief executive. I'm not going to bore you with that, but there's a little bit about him. It'll say how long is it? He's obviously been at Sbux for, and his past projects as well. So I guess Sbux are a company that tends to be growing all the time. You can also see a lot about the past and the future. Look at the valuation at the moment. They're quite undervalued at the minute, Sbux, I'd say. But obviously everything that's going on with the you-know-what affecting the economy, a lot of share prices may be quite undervalued at the moment. So now in the main point of the video is analysing the dividend and how much of a stable dividend Sbux has got. As dividend investors, we always look for a nice juicy dividend yield. So I'll analyse it now. They have a dividend yield of 2.78%. So there you can see it's got 4 out of 5, 5 out of 6 rating, sorry. And you can see the first green is higher. It's got higher dividend, and the bottom 25% of the dividend payers in the US market which are average 2%. And the only red on this list, which is not even really red, it's a 2.78 yield, which is low, which is quite a low dividend compared to the top 25% of dividend-paying companies in the US markets, which average around 5.59%. So Sbux is a relatively low dividend yield, but obviously, as you know, the higher the yield is not always the better. Usually anything between 3 and 6%. It's probably a good stable yield. So obviously Sbux just teetering just below that at the moment. The next green is Sbux dividends pay. I can't even say that. Sbux dividends per share have been stable for the past 10 years. So that's always good to know that they're going to get the dividend, probably not cut them. But although in the last 10 years there's not been really anything economical to cut that dividend, and obviously the company's been growing, so they get more cash flow and therefore more money to pay out to the investors. Next one, 4 out of 6 is, let me check that. There we go. Sbux have increased their dividend payments over the last 10 years. So that's what you want as well, guys. You want a company who pays dividends on a regular basis, also increases the dividends as well. So that's good to see. Next one, 5 out of 6, which is reasonably low payout ratio of 50%. Sbux dividend payments are well covered by their earnings. So again, that is a good point. You obviously want the company not to be going into debt and when paying out these dividends. It's just leftover cash that they don't really know what to do with. So then, therefore, they pay out to their investors. So then the 6 out of 6 ratio score is future dividend coverage. Sbux's dividends in 3 years are forecast to be covered by the earnings with a 53.8 payout ratio. So basically that means the future earnings are obviously going to be forecast to be paying out all the dividends, therefore increasing the dividend growth. So basically that's just a bit of the information there, guys, on the dividend yield. It does get a good solid 5 out of 6 score. Obviously the only blotch on the on the dividend score is obviously it's quite low, but obviously again that's not always a bad thing. It's only just under 3% of a yield. I do think Starbucks is a good solid company who I think will be continuing growing. Obviously everyone loves coffee, and on stopping on the way to work, on the way home from work, even on the lunch breaks. So yeah, I personally, if you've seen my portfolio updates, I do own Starbucks in my portfolio, and I do think it's one that I think will continue to grow in the future. So I do think it is a good investment. Obviously, I'm not a financial advisor. I'll tell you what I'm saying with a pinch of salt. Do your own research on the company. Obviously, this app that I'm using is Simply Wall Street. Really great app to use. You can see all sorts of different information. As you can see, I'm scrolling across the top. You can see price and news, valuation, future, past, health, obviously dividend as well, and then management. So there's a lot of information here, guys. Obviously, there's other websites you can get your information off as well. So I'm not a financial advisor, so don't take my word as gospel. I'm just doing this for entertainment purposes. So obviously, guys, that is it for today's video. I'm going to wrap that up here. Let me know what you think of the video. Give a thumbs up if you like it. If you don't like it, let me know as well. How I've come across in the video. So yeah, that is it for today's video, guys. I'm going to leave you on that. Take care.